We now delve into the healthcare sector. Hospital group Life Healthcare has reported a 35% rise in diluted headline earnings for the 6 months to March to 52.6 cents per share. Revenue climbed 12.7% to 4.7 billion rand. The group said continued expansion, including the acquisition of the Life Bay View Hospital in Mossel Bay, contributed to the growth. Life Healthcare is investing in future bed capacity to meet increased demand. I don't know if that's good or bad news.
I'm not sure
Increased
either.
demand for hospital beds.
Market cap 17 billion, price earnings 21, dividend 3.6. Dividend of 31 cents, they paid 29 cents previous. So in fact, the final was 29, the interim was 31, so moving in the right direction. Anthony, let's start with you. Healthcare is really, in a sense, a bet on an emerging middle class. You want to move away from the ills of state hospitals and the like. And on the flip side of that, a legislative nightmare, notwithstanding a national health plan coming out and pricing regulations and consumer protection acts. So a good bet in the one sense, but tough place to operate in.
You know, I think it really is about government's inability to deliver hospitals or medical services. And, you know, I think that's been a kind of interesting investment theme over the last several years, where the private sector is stepping into the vacuum that government's created through non-delivery. And we think that, you know, Life Healthcare is a great way to play this theme. You know, what you really got to think about this is a great property stock that also happens to sell a medical service. It's got very low debt on its balance sheets, you know.
And massively cash generative.
Yeah.
I mean, R1 billion, although second half of last year 1.4, so slightly down, but R1 billion ain't bad.
Yeah, net debt to normalized EBITDA is 0.84.
Yeah,
so
it's nothing.
It's nothing. It's less than 1 year's cash flow earnings in debt. So you've got massive pricing power in terms of your margin. There's lots of price points, so it's very difficult for consumers to compare and contrast what your value proposition is. I think that, again, there's lots of demand, and, you know, I think the markets might be mispricing the risk that the new health insurance scheme might pose to this company. I mean, it could be as much an opportunity as a risk. To take over, say, for example, the running of Baragwanath. Yeah. In terms of growth, they did 93 beds in the last 6 months. They're going to do another 200 odd beds in the next 6 months and 2,000 beds in the next 5 years. So lots of growth, acquisition strategy in Turkey and India. For widows and orphans, this is a great stock to own.
All right, so I mean, India and Turkey, as Anthony mentioned, they're expanding into that area. Do you think it's safe to go into these geographies? Do you think it's a good bet? We know that we've got the whole of Africa to look forward to as well. We know that they are, of course, working closely with Nigeria as well, the West African region, so a lot of potential in that space.
Yes, sure. I think that, as I understand it, they're doing a due diligence in Nigeria, and they've been quite circumspect in saying...
They're going in carefully.
Yes.
That was my sense of it, which wasn't a bad thing.
Yes, absolutely. That's exactly what I was going to say. They've been, I think the words the CEO used was a cautious approach to expansion. And what we see as well in terms of the results is that we noted, like the hotel, like a property or a hotel chain, occupancy in their hotels was only at 69.5%. You know, for the 6 months ended February. So there's still a lot of scope there. Their fixed investment they've already done. So in terms of running up, they can hold more patients, and it's not going to cost them too much more from a fixed cost point of view. So I think there's quite a lot of scope there still to grow without having to invest a lot of capital. And I mean, just from an efficiency point of view, they seem to be far ahead of their peers. I mean, I looked at the return on assets for Life, 12.6% against Netcare's 3.3% and Mediclinic's 3.2%. So I think very, very strong results from a very, very efficient operator.
It sounds like we're speaking about a hotel stock or a property stock, occupancy rates and things like that. Simon, what is your view? Do you think that it's a play in the healthcare sector with a property aspect, or a property player with a healthcare aspect?
It's almost management. I mean, it's that efficiencies, it's management, so that what it comes down to. You've got your beds and the like, and you're going to get your numbers through it. It's making it work efficiently, bringing those costs down, providing the beds there, keeping it running efficiently. And Anthony, as to Warren's numbers, certainly that's where they're pushing, that's where they're driving. Margins relatively small, 6.6. Is that something they can push, or is that going to be what you see in this sort of space?
No, I definitely think that there's room for margin expansion. I think that there is, not a lot of competition in the world in terms of, emerging market healthcare service providers. I think if you move into some of the less traded markets, in Africa and Turkey and India, you'll be able to, to have margins you can drive a bus through.
Mm-hmm.
So, it's a great business model, and you've seen the shareholder value that's been created out of Netcare and Mediclinics. There's no reason why Life Healthcare can't do the same.
You're leaning towards hot, right, Anthony?
Hot.
Hot, allocating new money at these levels, even with the NHI.
And I think that's more, on balance, is probably as much opportunity as it is threat.
Fantastic. Warren, hot or not?
This was a subject of much debate within our team, but I'm going to say not at the moment. I think it's fully priced. I mean, one of the things we saw as well is that they paid an STC, a once-off STC charge. So earnings are going to grow by about 60% this year, which means to me it's fully valued.
Fantastic. Simon, hot or not?
Short answer, hot.
Okay, great. We'll leave it at that. Technology firm Paracon's headline earnings for the 6 months to March rose 8% to 8.6 cents. The group said earnings were negatively affected by a first-time bonus expense. Revenue climbed 22% to 589 million rand as the group experienced growth mainly in its contracting services division. Paracon says it expects a difficult second half.
Market cap just over $500 million, price earnings 9.3, dividend yield 6.3, chunky dividend player. Warren, let's start with you. And a lot of the IT companies come across this desk, and I'm not quite sure what they do, cloud services and stuff. These guys, we understand, they're recruitment, they're specialized recruitment. I suppose it's a nice niche they've carved themselves out, notwithstanding labor broking laws are perhaps going to hurt that.
Yes, they did point out in the results that they published today that they're very carefully participating in the process that's going ahead with the revision to the labour laws. But two things I found interesting in the results here was the first is that they've basically internalized. Yes, 80% of their revenues and their operating profits come from their recruitment business, which is placing IT professionals in big corporates, etc., etc. But they've also put together a in-house project management team, IT project management team, which is delivering very nice results. And they also have, they had a great number come through from their associate in India. As we know, India's been a big hub of IT and software outsourcing for companies around the world. And I think their profits, their share of the profits increased by 178% from
and that's this place, I mean, Keith McLachlan posted on Twitter just before we went live that might go IPO and that could frankly be worth more than the current market cap.
And also saying that the market largely has ignored this news, and this is why we've seen pressure on its share price as well.
Yes, well, it's also a very small company, so I don't even think there was consensus earnings on this company when I looked at the numbers, and that's one of the reasons why these little things go unnoticed.
Fantastic. We're running out of time. Anthony, your view on Paracon?
I think its biggest client is Standard Bank, and I think it
and
also
we know what happened. Yes,
does service the other banks as well. Now, I don't know if you've seen the credit extension numbers; they're anemic. The only way banks are going to grow earnings is to cut costs. So that's retrenchments, staff cutbacks, running these things much more efficiently. I think that could affect Paracon quite dramatically. I think also, again, this labour broking uncertainty also could be a reason why the shares not perform well. Whether this Indian company lists or not remains to be seen. We think that this company has battled to grow in the last 3 years and will continue to be under pressure.
Hot or not?
Not.
Warren? Not hot. Simon?
Not hot. If you want to really take a nice high risk, like, going short of silver at 50. If things go well in India, it's going to be huge. But to Anthony's point in Standard Bank, to the labour broking issue, haven't got it going, I got to say not hot, but India's worth keeping an eye on.